as the world's primary reserve currency and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
The future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Today on the Blockchain Report, Bitcoin pops above 117K after Jerome Powell trims rates, proving once again that the Fed is Bitcoin's unpaid hype man. Jimmy Kimmel gets yanked off ABC mid-merger because nothing screams community values quite like canceling a host for speaking on free speech in the name of free speech. And Donald Trump is suing the New York Times for $15 billion over a meme coin, which is basically like blaming gravity for dropping your ice cream. All that and more right now on the Blockchain Report. Let's go! Good morning, my workday warriors, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco, the city where startups still think the phrase powered by AI means they don't actually need a business model. It's Thursday, the day corporate America calls almost Friday, and Bitcoin calls let's test your blood pressure again, shall we? Now, before we belly flop into today's buffet of Fed rate cuts, media mergers, and meme coin lawsuits, tap that like button and make sure you're following RoxomTV and me and Hank at RoxomTV, because if you're still trading based on a Discord channel run by someone named Crypto Mongoose 69, you deserve everything that's coming your way. And spoiler alert, it's not good. Now let's get into this morning's market rundown and see who's pumping, who's dumping, and who's praying Jerome Powell doesn't touch a microphone today. Let's do it. All right, sweet sassy Malassie, Bitcoin's looking good again. We saw that yesterday Jerome Powell mentioned they are cutting rates by 0.25% with more cuts likely before the end of the year, and the market is loving it. Bitcoin is back up over 117.5. It was as low as 115 in the last 24 hours, but things are on the up and ups. And the market is liking it, and so am I. And we'll talk about that more today. But right now, we got to get into it because we are getting into our first deep dive of the day, and our guest is waiting. So let's head over. All right, so we're kicking things off today with our first deep dive of the morning. And our first guest, well, he is the madman bold enough to run the only daily Bitcoin podcast on all of Earth, cranking out 365 interviews a year like it's nothing. He's also the founder of MicroSeed, the titanium-sized insurance policy for your Bitcoin keys. Fireproof, waterproof, and orange pilled to the core. Let's give a big Blockchain Report welcome to the one and only Robin Seyr, everybody. Robin, welcome to the show. Our audience is thrilled to have you, and so am I. How are you this morning? Thanks for joining us.
That's an amazing introduction. I think it's probably the best introduction I got so far in my 50 episodes that I've been on a guest. Thank you so much for having me.
Oh, the pleasure is all ours, Robin, and you are certainly worthy of the intro. I mean, you're the only guy running a daily Bitcoin podcast. That's a lot of interviews over the course of the year, and as someone who does those myself, I know. But before we dive into that madness, we got a lot to cover today. How does someone go from Austrian software engineer and political activist to Bitcoin content machine? What was that journey like?
I basically realized that, so I mean, this is a long story, but maybe I should just digest it a little bit. I was a software developer. I liked what I do. I really enjoyed what I was doing. And I realized that I want to do a little bit more, and I want to do something with Bitcoin. And the moment I realized this IT security thing is not that much for me, and it's not the main thing for me, I was like, let's dive into Bitcoin a little bit deeper. And the reason why I did that was basically for me that I want to say this with all my heart, is like, I believe that there are three main pillars in Bitcoin. The first pillar is the wealth and the non-programming knowledge. This is where most people come into Bitcoin. This is why people that have the first seeing they first see Bitcoin and they're like, yeah, it's the price, as you also showed on the show. It's like the 117. People see like, oh yeah, it went down to 50K, it went up to like 110K, and they see it again at like 90K, then maybe they see it again somewhere around 150K. And this is where most people come in. And this is how I came into in 2020 first into Bitcoin. And then the second pillar is for me the foundational pillar, the pillar where without that, anything, all the other things wouldn't even be possible. It's the pillar about freedom, about self-custody, about running your own node, about taking your own keys, about actually being the chief of your own transactions. So you can transact with anyone, you can receive from anyone, and nobody can actually F with your money. And then there's the third pillar. It's the community pillar. It's the one where you say, hey, I want to start a podcast, or hey, I want to start a small meetup. I want to start something in Bitcoin to foster the community, or I just want to be part of it. I just want to go once a month to a Bitcoin meetup somewhere in my local town. And those are the three main pillars in Bitcoin. And for the people that only see the first pillar, they have a hard time grasping, like, why does someone go full time into Bitcoin? Why does someone actually go ahead and say, like, I only want to do Bitcoin? And if you only see the first pillar, it sounds like a crazy move, and it is one if you only see this one. But if you see the freedom aspect, the sovereignty aspect of, like, someone, a woman in Africa that previously was financially dependent on his husband, on her husband, all of a sudden has a possibility to actually have their own bank account and receive money into Bitcoin. This is something, if you come from Austria, it's weird that you even need that, but it's a reality. And so if you see those three main pillars, you're like, yes, this is actually something bigger. I want to devote my life towards that. And there's like this element, and there's also a little bit this element of, I kind of stumbled into that. It's like I started interviewing people, and I started coming into the scene, and all of a sudden, more and more people wanted to come on the show. All of a sudden, I got sponsors, and all of a sudden, like, I did a daily show. Initially, it was meant to be a once a week hobby thing.
Yeah. Well, those pillars you mentioned, all very good reasons to go all in on Bitcoin. But I want to go a little bit further back even. What was your, as the term has become very popular now, your orange pill moment story? You know, that moment where the light bulb goes on and suddenly fiat feels like monopoly money and everything you thought was true is not, and Bitcoin is the way, the truth, and the light. Like, how were you initially introduced to it? Were you immediately infected by the orange pill? Or like a lot of people out there, did it take a little bit of time? Did you have to do some research to kind of fully buy into what Bitcoin was all about? Or did it happen just instantly for you?
I think nowadays, when you say Bitcoin, it's no longer that crazy. When you say Bitcoin in 2017, people reacted differently to this word because it was not as normal as it is now. And 2017 was the first year where I heard Bitcoin. This is the first year where I kind of got introduced to Bitcoin. And I was a stock investor beforehand. I invested in tech stocks. It was just like, I was very young also at the point. And it's just like, with my few $1,000s on the side, I just like wanted to invest in something because I didn't believe that it's the best place to keep it in my bank account, as I was right. And I didn't have a really good plan of like what I do in the stock market, but it did great because it was a period where like everything went up. And as you naturally rise to the top because your friends are like, oh, you make a bunch of money with stock investment. What do you think about Bitcoin? So 2017 to 2020, I had my stock investing period where my friends said like, oh, what do you think about Bitcoin? And I always said, I think Bitcoin is a scam. Like there's no value to that. It's like gold, but not real. so that's usually what I said. Yeah. And then in 2020, more and more people kept asking me about it. And I was like, if I say Bitcoin is a scam, at least I should have good arguments, because I kind of discovered that I don't have really good arguments against Bitcoin. And it was just one weekend where I kind of discovered, Bitcoin doesn't make any sense for me. And on Friday, I went with exactly that framework. And on Sunday, after researching the whole weekend, I was like, maybe there is something. Maybe Bitcoin isn't a scam. Maybe Bitcoin actually is an alternative monetary system. but I was still not sure. So this was kind of not a light bulb moment or like not something huge. It was just like getting me over the edge of maybe there's something more to Bitcoin. It was also about the same time where Saylor came in 2020, and Saylor really spoke to me because not directly, but through his podcast, because I was a stock investor and he was CEO of a publicly traded company, and he spoke the language of a publicly traded company, and I was used to that language. And he was the first publicly traded company that went into Bitcoin. And this was the first time someone told me about Bitcoin. It made sense. So like Saylor, then Saifedean, and like many others, where I'm like, okay, this slowly makes sense. But it was very hard. In the first, you have to know, like, I was very much on cash flow focused. I was like, there needs to be cash flow in a business, and Bitcoin has no cash flow outside of mining and other things, but Bitcoin itself has no cash flow. So getting over the hump of investing in something that doesn't have a PE ratio was very hard. And this was then a gradual journey of learning about what is actually money and what is actually gold, what was the history of money. And this is probably a story that you've probably heard like 100 times already. And this was just like a gradually increased conviction to Bitcoin, where then at some point I made a decision, and it was something I was fully invested in Tesla right before I came into Bitcoin. And then Bitcoin kind of grew. And in 2021, I had 50% Tesla, 50% Bitcoin, which is crazy. Like it's like the two investments where everyone tells you don't go all in on it. And I went only all in on those two. And I wanted to decide, like, where do I really wanted to go? And it's funny, in the hindsight, I really decided, do I want to go all in Tesla, or do I want to go all in Bitcoin? I decided for Bitcoin for many reasons. We can go into this. But basically then from 2021 onwards, I was fully all in Bitcoin. And now it's 2025, so I'm already 4 years in there. And then started the podcast and all of it later on. So it was for me a very gradual journey, a very a slow journey towards that. So not like a light bulb moment. It was more of like more and more arguments, more insights, and more books and podcasts that gradually made me from Bitcoin is a scam to maybe Bitcoin is something.
Yeah, I think that's a pretty common track that we see a lot of people in this industry go through. And Michael Saylor himself was not a Bitcoin believer at first. And then we'll go and do the research and we're like, we got to figure out what's going on with this thing. This can't be right. And then you keep doing more research and it keeps making more and more sense. So it's not uncommon, I feel like, that it takes a lot of people time to really wrap their head around what Bitcoin really is. And to you, you're now hosting a daily show on Bitcoin. So your journey is taking you from one end of the spectrum to the other opposite end of it, which again seems to happen with some frequency here. But it begs the question for me, like, what made you say, hey, you know what? I believe in this Bitcoin thing so much. I'm going to be the lunatic that does this every day while the rest of podcasters in the world coast with just one episode a week. What gave you the insane and ambitious idea to do an interview every day? I love it, but I'm terrified for it because I do them like 5 days a week, and that's plenty. That's plenty.
First of all, it gets better over time because you get a team and an editor, and you don't have to do all of it. And now I can focus on the editing. There's two answers to that. The first practical one is I kind of stumbled into that. I came from IT security sales, and I was used to, if I have 60 outreaches, that I get 55 people saying no and maybe 5 people say yes. So I was like, I want to have 5 people for the next 5 weeks. Every time on Monday I release it. And reach to 60 Bitcoiners out, and like almost everyone said yes to a non-existing podcast. And I was like, okay, and now I have like 60 podcasts within the next 2-3 weeks. I have to release them also. So I went from like once a week, twice a week, 3 times a week, and I just increased it. And now I have it every single day. This is kind of the like one side of it that is kind of true, and kind of like I stumbled into that. But the main thing for me is that I now, as I also have the podcast, and I also got from the podcast that I see Bitcoin as something more important than just an investment. For me, Bitcoin is not just like another investment, not just another thing that I spend my time on, or Tesla, or some other company. Bitcoin for me is a foundational paradigm shift. What I mean by that is there are products, there are services, and there are protocols, and there are foundational inventions, and they are oftentimes confused. For example, a company is Tesla. The product is like Tesla Model 3, for example, and then the foundational invention that changes everything is the wheel. That kind of drives the Tesla, like the tire, the wheels on the Tesla. That's the foundational thing that never changed in the last thousands of years. And we have, and you can debate on like where is the line between a protocol layer and a foundational invention. For example, the TCP/IP protocol, you can call it a protocol, but you could also make the argument this enabled everything that came with Facebook, Google, and co. And so it is a kind of a foundational layer to the internet. For me, where you cannot argue are fire, the wheel, and things like that. And for me, Bitcoin, so crazy that it might sound, for me, this is the moment where there's a foundational invention that changes the course of history. I say that it's the fork in the road of human civilization. It's a little bit like the printing press, the steam engine, the electronic telegraph, where before things were made differently. Before the printing press, and I love this example, it took a long while to print one book because someone actually had to write it. And for someone to write a book, it took around a few months to up until over a year, depending on how long the book is. The Gutenberg Bible, I think it had like 1,200 sides. Were usually made around 1 year by just writing it down from one person. With the Gutenberg press, with the printing press, it took in the first 5 years, one person was able to print 180 Bibles. Then if you fast forward 15 years later, there were 50 million books made with the printing press in the European region. And so how does this change human civilization? Like hugely. And the same with the electronic telegraph, the same with the steam engine. And I think the same with Bitcoin. We are now in the first like few years of Bitcoin where we don't really see the global impact. Like the first 5-10 years of the printing press, you didn't directly see what impact the printing press really has. Like this was just like one guy printing some books, and it was just an interesting technology. Like you could even say, like at that point it was still a product, but when it hit the mass market, all of a sudden the small product that someone made out of financial desperation, all of a sudden was a foundational invention that changed the course of history. And we still talk about it, even though it's quite some time ago. And the same thing, I think, is true with Bitcoin. So those are the two main things why I do think, why I think I do it daily now. The first thing is I stumbled into it a little bit. But the second thing is, imagine having a daily podcast that really documents how the printing press came to be, how the fire was first discovered, how the wheel first came in. Having that kind of documentation, like that's just amazing. And I just had previously on Grant Cardone, I was able to speak with Michael Saylor, I was able to speak with Jeff Booth, I was able to speak with so many great leaders in the space. And this is for me such an honor that the people that shape the Bitcoin history and I'm able to sit down with them and talk through what it means, how will Bitcoin develop over the next 10, 50, 100 years? How will this all shake out? Like what does it mean that we now have Bitcoin? What does it mean to have Bitcoin in 50 years? So that's the two main reasons I think why I do it daily. And now a third reason might be, I told now so many people that do it daily. And if I meet someone from outside of a long time, they're like, "Are you still doing it daily?" I'm like, "Yeah." So I now it's almost like a social pressure that I cannot get out of.
No, I respect that though. I mean, I think it's like you see this wave that's coming and you're riding it, and now you can't get off of it, right? Because it's more dangerous to get off of it than it is to keep riding it. And I agree with you in so many ways here, because we're at kind of an interesting inflection point, not just in, you know, the monetary history of the world, but also within the Bitcoin ecosystem itself, right? It's becoming a lot more mainstream. And I read that you've said that the mission of your podcast is actually to make Bitcoin insights accessible to a broader audience, which is more important now than ever. So my question for you is, like, how do you strike that balance between devs talking about lightning channels and then the average listener who still thinks that seed phrases are some kind of gardening tips? How do you strike that balance?
I love that because I did just 2 days ago, I had a podcast with Mr. Nom, and we talked about Bitcoin nodes versus core, like really in depth, and I didn't even understand everything he said. So this was like a lot of technical debates on what is the best implementation for your Bitcoin node. And I recently asked on my Bitcoin, on my YouTube channel, on the community tab, I asked, "Hey, what do you think? Which Bitcoin implementation of the node will win out?" And people ask me, "What is a Bitcoin node?" like what the heck are you talking about? So there is a different level of the audience always in there. I always assume in each and every episode, there's one guy that knows Bitcoin way better than I do. And there is one guy that has just turned up with his first ever Bitcoin video. So this is generally a quite hard problem. But the good thing is I do so many episodes, so I can focus on one episode, just like going deep in the technical things and trying to explain things as I would be like as it is as easy as possible. But then also I have episodes, as I said, with Grant Cardone, where we don't go into details at all. Like there's like very surface level, but also very interesting, where we talk about macro developments, how realistic compares with Bitcoin. He also went into how everything is how he doesn't like paper promises, so he doesn't like changing paper for paper, like buying stocks, for example. He also mentioned, really interesting, I don't know if we want to cover that today, how he thinks all the treasury companies will go to bust outside of those who actually deliver businesses in the real world. And so those talks are very different from the technical ones. And I think the range of it actually makes it interesting, especially for me, because I like, you have to change a lot. And if you do 5 a week, that's amazing, because you also get very different personalities, very different people in there.
Oh, yeah.
But honestly, overall, I love it, and I try to keep it educational for everyone in there. Even though if you know a lot about Bitcoin, you probably do it more for entertainment and less for education.
Yeah, no, it sounds like, I mean, you've spoken with hundreds of people. I mean, teachers, authors, CEOs, engineers. So it sounds like, you know, you've got a little something for everybody. Some of those are going to be a little more on the technical edge, because that's the conversation that guest deserves. And then some are going to be a little broader for everybody, like a Grant Cardone, for instance. So through all of these interviews you've done, have there been any guests that stick out in your mind that totally surprised you with their perspective on the Bitcoin industry? Maybe you were expecting one thing and they just totally blew your mind with something else. Is there anyone that stands out to you during your many interviews you've conducted?
Yeah, I get that question actually all the time, and it's so hard to pick one. There is a lot of things that stick out to me. First of all, I always want to mention Jeff Booth because he was one of the main deciders why I went with the podcast. Not just that I started the podcast, but actually went all in, also with my time. So when I started the podcast, I was still doing a full-time job, and he said something in the end that is still in my mind, and how he said it in what he said there. He's like, if you have all your financial energy in Bitcoin and you know what's coming towards Bitcoin, why are you still having your actual time energy, your physical energy, still into the fiat system? And that stuck with me. I'm like, I have a Bitcoin podcast. I have all my financial energy in Bitcoin. Why don't I also use my time, which is the most valuable thing that you have, towards Bitcoin? Why don't I go all into Bitcoin also with my time? So Jeff Booth is for me just like one that he agreed to be on my podcast when I had 300 subscribers. And I used the old YouTube channel that I made, started in 2020, and there I racked up 300 subscribers. So he basically came when I started my podcast directly already on my channel. So I'm deeply grateful for him to this day that he decided to come on my show, because he was the first big guest that I had on. I mean, Saylor was for me another one that just completely, absolutely surprised me. I had at that point, I think, 2,000 subscribers, and he just like said like, oh yeah, like let's do it. And I was like, what? You want to come on my little show? Like I'm just an individual that is like 25 years old, has nothing to do. Like I'm no fame, I have no money, I have no company, and he just decides to come on. So like humbleness of Michael Saylor honestly surprised me, and I think not enough people give him credit for coming on smaller shows too. That's absolutely amazing what he does there. Then there are, of course.
Yeah, go ahead.
Yeah, go ahead.
Oh no, I was just gonna say, like, it's not that surprising though, because like people in the Bitcoin space know that Bitcoin is for everyone, right? Like it's this thing that benefits us all in the future. So it's not that surprising to me that these big names, especially early on, were, you know, agreeing to go on your show. But I'm certainly glad they helped serve as a catalyst for, you know, helping it become what it is, you know, today. And kind of to that point, I was reading about you a little bit in preparation to have you on, and I saw something where you said that money is for everyone, but at this point, everyone isn't on the same page when it comes to Bitcoin. So my question to you is, how do you talk to people in Vienna who might see Bitcoin as speculative versus a Bitcoiner in El Salvador who's literally using it as money? Because people in different parts of the world see Bitcoin very differently right now.
And this is the challenge, you know, like I start by answering the question a little bit differently. I think we don't need everyone in order for Bitcoin to be money. Let's make a really weird example. If we talk about vegetarian food, and it's very controversial in Bitcoin, but let's go there. How many vegetarians do we need in order to for every restaurant to actually have a vegetarian option? There are many studies on the percentage. They range from like 4%, 6%, 10%, whatever the percentage is. But it's probably somewhere between 4 and 10%. If it's stick with the higher number, 10%, just for easy math, you have a restaurant that maybe serves like 1,000 guests per month. And if 1,000 guests per month come into your restaurant and say, oh, I'm vegetarian, what do you offer for vegetarian options? And the restaurant says the whole month, no, we don't have vegetarian. Then you will have, and important, those 10% of vegetarians are strictly vegetarian, like they will not eat any meat. If then those 10% of people walk out of their restaurant because they have no vegetarian option, at some point the owner will say, hey, let's spin up a vegetarian option. We should have something vegetarian in our menu. Because if you have 1,000 people per month and 100 of them walk out per month because there's not a good option on there, this will drive the attention towards the owner and saying like, yeah, like we need to have like at least 1-2 good vegetarian option. Now, how does this relate to Bitcoin? We don't need actually 100% people to be fully focused on Bitcoin to have Bitcoin adopted as money. We only need around 4 to 10% being intolerant about using Bitcoin. Like I am now at the point where when I work with partners, I only work with them with Bitcoin currently. Obviously, like YouTube and those kind of partners, of course, like I don't have the leverage to that. But with all my, like with Microseed and many other ones, like we all work together on Bitcoin. And the more people that say like, oh no, like I want to be paid in Bitcoin. And I want to pay you in Bitcoin. Actually, funny enough, I just realized that Grant Cardone, this is his orange pilling stories. He got a speaking gig and he got paid in Bitcoin. And the president of his company said like, no, we want cash. And then Grant Cardone said like, I'm anyways there. Let's let him pay in Bitcoin. And that was his first, 115 Bitcoin that he got for a speaking gig very early on in 2012, 2013. He said to this day, the best paying speaking gig he ever did, whatever the 115 Bitcoin is. But back to the story. When you have a restaurant or any merchant that has 1,000 customers per month and 100 people, 10% of them say, oh, I want to buy that PS5. I'm in an electronics store. And can I pay it here? And they're like, yeah. And then you say, oh, can I pay in Bitcoin? And the store owner says no. And you give him the PS5 back and say, oh, I'll get it somewhere else where I can pay with Bitcoin. At some point, the store owner will go ahead and say, I will look into how do I accept Bitcoin. It's not that hard. Like everyone can accept Bitcoin. It's like an app on your phone and you all of a sudden accept Bitcoin. It's not the rocket science. It doesn't even take money. And the store owners will actually see it actually saves you money on the transaction fees and actually is a good thing because it raises the value over time. So my point is we don't need to convince the mass market to adopt Bitcoin. We probably only need around between 4 and 10% of people that are very passionate about Bitcoin. That's why I say, if you are really passionate about Bitcoin and you want to establish it as money, go ahead and ask in all the places where you give other people money, can I pay in Bitcoin? And most people will probably say no. But if more and more people do that, more and more people, more and more merchants will hear this option of Bitcoin. And if a waitress in a bar hears 3 times per day that someone wanted to pay in Bitcoin, and this was kind of a trauma, she will go to the boss and say, hey, there's another one that wants to pay in Bitcoin. At some point, the boss will say, oh yeah, let's accept Bitcoin. Like if people want it, let's accept it. They don't need to be orange pilled. They can accept Bitcoin and directly convert it to fiat. They probably won't because they will see if they are then seeing the accepting of Bitcoin and then they get orange pill a little bit. But necessarily they don't need to be orange pilled. They just need to accept it, and then all of a sudden they have it. And so when we come to back to your actual question of like how do I explain it to someone, I usually don't. If someone doesn't get it, like it's okay. Like I think we are better off educating the people that are willing to be educated and go deeper down the rabbit hole, and having people that are really passionate about it, and having people that say like, oh, I want to be paid in Bitcoin and I want to pay you in Bitcoin. This probably makes a bigger impact of saying, hey, let's give everyone like $1,000 in Bitcoin, like this. So that's why I'm a big proponent of grassroots and deep learning.
Yeah, no, I think that makes a lot of sense, right? Like you're not going to be able to convert somebody, or not necessarily convert, but really get somebody to buy in if they're not interested in the first place. And with the way the monetary system is now, especially in like a lot of South American countries, people are looking for an answer to this very big problem they're having, and Bitcoin is it. And while that might not be the case in somewhere like Austria just yet, Bitcoin's going to make its way through to everybody in the world because it does solve a huge problem that's affecting billions of people right now. Now, really quick, I want to bring up his podcast really quick. If we can bring that up there, guys. So we're actually we're going to go to that last. Okay, so right now, actually, before we do that, Robin, I want to play a quick game with you on our show here. I don't know if you're familiar with The Price is Right. I'm not sure if they have that in Austria, but it's a popular game show here. And we liked, this has been an interesting year, 2025 for Bitcoin. We got new all-time highs. The landscape, both in regulation-wise and institutionally, has changed a lot. So what we've been doing is all of the guests on our show, we're having them make their just for fun and games price prediction for Bitcoin by the end of 2025. And the winner, we're going to send a Roxom Patagonia to at the end of the year. So right now you can see on our leaderboard, these are some of the people that we have with their current predictions. So at the very highest, we have Knut Svanholm said 443,000. God, I hope he's right. But then you can see on the more conservative end, I'm below, what am I at, 142. We had Joe Burnett over at Sumler, thinks 150. What do you think? For fun and games, where is Bitcoin going to be by the end of this year, December 31st of 2025?
172,000. Oh gosh, no, sorry. No. Someone already picked that. Sorry. I will not pick something that already someone else picked. I will go above that at 175,000.
175 for Robin. Great. We're putting you on the board. So hopefully I'm going to be putting a Patagonia vest on you next time you come to the show. So we appreciate you playing along with us. Now let's get back to camera one here, guys. So our time here is running a little short here, Robin. But before we go, I want to give everyone in our audience the opportunity to check out your amazing podcast. It's every day. If we could bring that up here, guys, what's the best place they can go if they want to learn more, check out the podcast? It looks like it's definitely on YouTube. Can they find it on Spotify? What's the best place for them to check it out?
Yeah, the main place is YouTube, and yeah, this is the best video that I had so far, from views standpoint, the Michael Saylor one. I'm really close to hitting 20,000 subscribers. I think it's 20 people or 30 people are missing, something like that. So would be fun if we can hit it today, actually. This is the best place to find me on YouTube. And I actually have the same handle, at Robin Seyr, everywhere. If you are more on Twitter, you can find me there. If you're more on Spotify, you can find me there. I did my best to be very findable on every single platform. I'm on every single podcast platform. I'm also on Rumble with my podcast. So it's very easy to find me. Thank you so much.
Amazing. Well, Robin, I got to say, first of all, thank you so much for your time and joining us today. And thank you for doing what you're doing. By doing a literal episode every day, you're kind of like a historian of this really interesting time that we're seeing, this monetary shift in the modern world. So I really appreciate you, doing the work and putting people out there so they can chat and talk about where we are and where we're going. And, if people in our audience already, if you haven't, go make sure to give Robin a follow on the YouTubes and everywhere else that you go and doom scroll, because he's doing God's work out there, Robin. You really are. And we appreciate you sharing your expertise and insights today with us in the Blockchain Report. Thanks so much for stopping in.
Thank you so much for having me.
Yeah, the pleasure is ours, and you got a new subscriber coming your way right after this show. So hopefully 19 more. Let's get them over that 20K mark, boys and girls. All right, Robin, well, thank you so much. It's Thursday, so enjoy the rest of your weekend. Have a great weekend, my friend. Appreciate you coming by.
Bye-bye.
Cheers. Yep. All right, we're taking a quick break, but when we're back, we got more Blockchain Report coming up with today's top news, and we'd have not one, but potentially two more guests joining us today to talk shop, so stay tuned for all of that and more coming up right after this break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing using Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, welcome back. It's time for more of this morning's Bull Run with one of the real hot stories on the interwebs as of late. We're talking, of course, about ABC and how they officially pulled Jimmy Kimmel Live indefinitely. Not because viewers finally got tired of him or anything, but because Nexstar Media Group is in the middle of a $6.2 billion merger, and apparently the FCC now decides what jokes make it on air. Nexstar, which already owns or partners with more than 200 TV stations, is trying to swallow Tegna and pick up 65 more. That deal still needs a thumbs up from the FCC, which is chaired by Brendan Carr. And Carr, well, let's just say he's not buying tickets to Kimmel's upcoming tapings. On Wednesday, Nexstar condemned recent comments Kimmel made and said Jimmy Kimmel Live would be preempted on its stations for the foreseeable future. Hours before, Carr had slammed Kimmel for a monologue about the alleged killer of right-wing activist Charlie Kirk. Kimmel said the MAGA gang was trying to spin the murder for political points. Carr accused him of playing into a false narrative and floated the idea of FCC action. Then he told affiliates, push back, stop airing Kimmel until Disney straightens this all out. Or in other words, your comedy lineup is now a merger negotiation tactic. Within 30 minutes of Nexstar's condemnation, ABC announced it was pulling the show network-wide. Conveniently, Nexstar also confirmed it plans to formally submit its FCC merger application on September 30th. Because nothing says community values quite like silencing late-night hosts right before your $6.2 billion deal hits the regulator's desk. If this feels familiar, well, it should. CBS axed The Late Show with Stephen Colbert just 2 months ago under eerily similar circumstances. That came during the Paramount-Skydance merger, which also needed FCC approval. Colbert had just mocked CBS's settlement with Trump as a big, fat bribe. Days later, he was gone. The merger sailed through the following month. Carr didn't exactly hide his glee this time either. After Nexstar's move, he posted on X thanking them for doing the right thing. And when ABC followed suit, he sent journalist Brian Stelter a gift from the office of Michael Scott and Dwight Schrute high-fiving. Regulatory neutrality has apparently been replaced with meme culture. Meanwhile, Kimmel had already issued a sympathy statement to the Kirks on Instagram, writing, instead of the angry finger-pointing, can we just for one day agree that it is horrible and monstrous to shoot another human? He added, on behalf of my family, we send love to the Kirks and to all the children, parents, and innocents who fall victim to senseless gun violence. But apparently, none of that matters when you're standing in the way of a $6.2 billion media merger. So now late night TV looks like this. Colbert's gone, Kimmel's gone, and the only guy getting more airtime than both of them is FCC chairman Brendan Carr. All right, we're bringing in a good friend of the program and fellow Roxom host Nolan Bowerly to talk about this latest development with Jimmy Kimmel and ABC. Nolan, what do you make of this? Is this kind of weird? This feels like someone getting punished for free speech when talking about a guy who was also punished for free speech. Where do you land on this?
Well, so first of all, let's just contextualize Brandon Carr and the FCC and ABC in particular, right? So indeed, you laid out the facts exactly as they are. Sinclair, one of the big syndicated networks that is in charge of this stuff, was one of the ones who indeed took Brendan Carr's prompt and said, no, let's put pressure, we're not going to air it and all that stuff. But let's go back. One of the good contexts, I think, for Bitcoiners to ground it in Bitcoin is a lot of what we see with the Bitcoin scaling debate right now with the ordinals and the bandwidth. Because, of course, we understand Bitcoin, the coin, is a commodity. We talk about it trading all the time here on the network. But block space as well is a commodity, right? So you have the commodity of the coin and you have the commodity of block space. And I think Bitcoiners are always talking about blockchain bloat. You hear this debate about ordinals and what do we do about people using Bitcoin as a data storage layer. Probably not good. Why don't you move to another database? You hear a lot of people who are against the use of Bitcoin for these purposes arguing. And they will say this isn't censorship. What it is you've got the sort of beachfront commodity of Bitcoin block space. And so they'll say, go use another chain. Right now, the thing that Brendan Carr regulates is a little bit like that. It isn't about First Amendment rights or anything. The spectrum on which television is broadcast, like that part of the spectrum, is the best spectrum there is. Let's say that it's got the best qualities. It goes in your basement. It can be broadcast from one tower over a huge area. So because of that, broadcast media the stuff over the air is regulated very differently and always has been. Much like we hear with Bitcoin, right? You don't hear anyone saying, oh, it's freedom of speech on Bitcoin. It's really just the practicality of using the Bitcoin blockchain for JPEGs or not. And I don't know what the right answer is there, but you hear that debate all the time, right? Go to another place, go to another area. The thing about what happened with Jimmy Kimmel and ABC is the television spectrum, the over-the-air television spectrum, is the beachfront. It's the Bitcoin of spectrum. It's the Bitcoin of broadcast channels, right? So that's the reason why it's always had these rules about lying and both sidesism that they're supposed to keep up with, versus just cable TV where all this other stuff exists, right? Where internet, where freedom of speech is absolute because the platform doesn't have anything to do with it. That's why there's no regulator involved. So Brendan Carr doing this right now, it's definitely political, so you can look at the other second order effects. And the reason you have to look at the second order effects, again, because this is about the use of the commodity of the spectrum, the over-the-air spectrum. Now, I personally believe television should no longer have this beachfront. I think the internet or something else should be broadcast along those frequencies because it's kind of a waste on boomers, and the beachfront best spectrum there is to be used for late night TV and soap operas during the day and broadcast television that nobody watches in general, right? These are highly unpopular channels right now. So go to what, Michael Saylor talked about this yesterday at the Bitcoin for Treasuries unconference that we broadcast here on Roxom yesterday, hosted by Tim Kotzman. And Michael Saylor was asked to weigh in on the scaling debate, much like this is. And he talked a lot about second order effects, right? So we got to be careful about what we do to Bitcoin. We got to be careful about what kind of genius developer we put in there because of these second order effects. And the second order effects are what makes this kind of funny, right? Because Jimmy Kimmel had the exact same reaction to Tucker Carlson getting canceled. For example, he laughed. He said, wonder where Tucker Carlson's going to go now that Fox has canned him. And so he had a good laugh about what Tucker Carlson is going to do. He said, oh, maybe he'll get a job on OAN, obviously not understanding the second order effects of deplatforming Tucker from Fox ended up creating a much bigger Tucker Carlson than he ever has been. I can also point to ABC doing the exact same thing with Roseanne, right? Remember Roseanne? You can actually find Jimmy Kimmel making jokes, laughing about Roseanne and getting her show taken away for a joke about Valerie Jarrett and Planet of the Apes or something like that. So it's the same idea. So the second order effects are important here, right? You're not going to see unanimous support of Jimmy Kimmel simply because it's funny. It's just funny. It's like the funniest thing he's done in a long time is get canceled after he was standing by watching other people get canceled for a long time. So, the First Amendment, just like the First Amendment doesn't apply to Bitcoin block space, right? People can go on the internet. Jimmy Kimmel, just like Tucker Carlson, is free to go and make a decentralized career. He's free to go on the internet and say whatever he wants. He's free to go on cable television. Even the Comedy Network has nothing to do with Brendan Carr for those reasons, because it isn't that sort of beachfront real estate that the broadcast media has. So because it's beachfront real estate, no new rules are needed to censor anyone. They created rules a long time ago that have nothing to do with the First Amendment, that have nothing to do, they're not protected because of the nature of that spectrum. That's why there's a regulator. That's why there's always been rules about how to broadcast over the air. It's exactly what was leaned on to fire Roseanne many years ago, which Jimmy Kimmel had a good laugh about. So it's second order effects. Everything is contained in that little Michael Saylor talk yesterday, right? He was talking exactly about this. He was talking about, do you allow Bitcoin to be used for these purposes or those purposes? You have to think of the second order effects. Lots of people warned years ago that deplatforming Donald Trump from all social media, that wasn't even broadcast, that was everything, and everybody thought it was really funny and da-da-da-da, ha-ha-ha. So the second order effects here just sort of add the comedy to it, right? So, it's easy to judge the reactions to this, the different ways that people are trying to defend and attack. There's that whole dialogue right now on the internet, which is it? In the end, the spectrum that Brandon Carr has control over is just that little UHF band, right? It's the channels 1 to 12 that most people don't even remember. Cable TV took away the limited commodity of spectrum. That's what induced way more freedom of speech. That's what created the understanding of broadcast media freedom of speech, which still entirely exists on the internet, still entirely exists in cable television, but was never there in broadcast television. It's a completely different thing. Just like we understand in Bitcoin that the Bitcoin blockchain, the actual commodity of Bitcoin block space, is not a freedom of speech zone. It's just not. Now, the rules are you allow a lot of things to be said, but there's a limit in the size of JPEG, for example, that you can put in Bitcoin, right? There's all these limits. Those are just the physical constraints of the commodity of that place, of that piece of spectrum, of that broadcasting area. So that's what we saw with Brendan Carr.
Yeah, it does concern me though, right? At least I get what you're saying, I think. But doesn't this kind of FCC influenced censorship of media is it kind of indicative of the fact that free speech really isn't free in the same way that it used to be? Because it could almost, to me, this is more about it's distasteful. It's distasteful to make a joke about somebody who was just horrifically killed, in front of the world, right? Is it really about distaste, or is it about free speech? Because if it's about distaste, I can understand that it's a business decision. But if it's about free speech, then I think we're kind of running a slippery slope, especially with traditional media.
So the rules about this FCC stuff that pertain to the over-the-air spectrum, the over-the-air commodity on which these channels are broadcast, it's simple. It's no lies. Mm-hmm. So the limit of freedom of speech on that is not the normal First Amendment. You can't yell fire in a crowded theater, right? So we know what those limits are. Right. On the spectrum, it's always been different because it was seen as a public good because it's limited, just like Bitcoin is limited, just like Bitcoiners argue about the Bitcoin block space being a public good, and we have to come up with the most efficient use of that real estate, the most efficient use of that limited commodity. It's the same argument here where they didn't need to invent any rule. It's really that it was very obvious by Monday that it wasn't a MAGA person, and it's a lie. So lying is the limit. Now, to what extent is it a lie? I mean, you could litigate it. I'm sure there's wiggle room. I'm sure there's some lines maybe getting crossed, but I think we're well beyond that that world right now. And again, go back to what Michael Saylor said, the second order effects. You're not going to hear a bunch of people feel that this is chilling for freedom of speech, because many people have experienced this already, right? Many people have seen government abuse these tools and come after people. It's what everyone said was so dangerous about deplatforming Trump back in 2020 or 2021. A lot of people, myself included, I was a big Trump supporter in his first term, but by the last day of his first term, with the no pardons to Ed Snowden, the no pardons to Ross Ulbricht, even people like me we wanted something else. But we nevertheless warned at the time. We nevertheless warned. Do you understand this is a two-way street? People can fire back. Do you really want to open Pandora's box in censorship? And people were saying that even before. People were saying that about when it happened to Roseanne. People were saying, well, wait a minute here. I get that Roseanne, said something insulting, but these were all the arguments used at the time. No, this is ABC. This is a separate rule. It's not First Amendment. She's not just a comedian. So people took note, and just like Michael Saylor told everyone yesterday when he weighed in on the scaling thing, which is kind of going viral amongst Bitcoiners today, it's this admission that the second order effects have to be contemplated in any protocol change. The protocol in censorship was changed in America 10 years ago when people started to censor people like Roseanne. And so the protocol was changed. The rules of engagement have changed. The protocol is somewhat organic. It's what we like about Bitcoin. The protocols are hard to change in Bitcoin. The protocols in the fiat world are easy to change. You just have to create a precedent, and that's what the whole common law structure does. Once you do it once, anyone can do it. So a precedent was created, and this is just the consequences of that precedent. So is it chilling? I mean, I don't feel like ABC or broadcast media ever pushed the bounds or boundaries of freedom of speech to begin with. This is just a convenient argument, as far as I can tell, because it now fits them. They were not saying this a little while ago when it was Tucker Carlson getting kicked off. I mean, you can take all the Jimmy Kimmel quotes and put them in a row about how many times he's laughed about this. So second order effects matter. And is it chilling? I mean, the chill happened 10 years ago. So that's how a lot of people see it, right? This is the consequence of what already happened.
Yeah, you make some very fair points there, Nolan. And as always, we certainly appreciate having you on to help us connect the dots in this ever-confusing media and, free speech landscape, and where are things supposed to land, or what is apropos and what's not now. It's hard to keep track, so we always appreciate you and your insights for that. And I know you got to get going, so we thank you as always for tuning in with us, and we hope to see you really soon, buddy. Thanks for your time.
Thanks, Hank. I hope that was helpful. I love coming on.
Cheers. Oh, we love having you. Anytime, buddy. All right, enjoy the rest of your week, Nolan. Thanks, bud. All right, let's get back to more stories here, gang, because Bitcoin, in case you weren't paying attention, finally woke up from its week-long shuffle and broke above 117K after the Federal Reserve cut interest rates by 25 basis points. So yeah, the Fed just shaved off a quarter point, hooray! And Bitcoin immediately treated it like rocket fuel. This was the Fed's first cut in 9 months, and the Fed Chair Jerome Powell's remarks hinted at more rapid easing over the next year. The Fed's projections now show 2 more cuts by December, bringing the federal funds target range down to 3.5% to 3.75%. Or in other words, the money printer is warming up, but they haven't hit the turbo mode just yet. The rate cut ended Bitcoin's week-long sideways dance and lifted the entire crypto market. Here's more from ABC News when the federal rate cuts were actually announced. Guys, let's roll the clip.
Hey guys, so we have just gotten this Fed statement, the Fed cutting rates by 1/4 point as expected. The Federal Reserve now with its first interest rate cut since last December, voting to lower those rates by the expected 1/4 point. We are looking through this statement here. The Federal Reserve, it does say that there was one dissent against this action, which was from the newly appointed Fed Governor, Stephen Myron, who currently serves at the White House as President Trump's top economic advisor. He wanted a bigger 1/2 point rate cut, but that is from this statement, guys, only that one dissent. So notable, there was a pretty broad consensus here at the Fed around this rate cut. Of course, we've heard about how the reason for this is because of the weakening jobs market. Now what we're looking at is what the Fed says in its projections about rate cuts in the months ahead. I'm going to pull that up as we move on here.
Okay, and I mean, Alexis, these cuts coming after Trump led the months-long pressure campaign against the Fed to lower the rates. So So did that pressure clearly play a part in today's decision?
Well, I think it's interesting that the one dissenter today, the one who voted against the majority, was Stephen Miron, who is fresh to the Federal Reserve Board. He was confirmed by the Senate just on Monday. By the way, he's also the head of the White House Economic Council. Many Democrats have said, look, that's a conflict of interest. He can't be working for the White House and sitting on what's supposed to be an independent Federal Reserve Board. Miron has said, though, he's going to take a paid leave of absence from his position in the White House while he sits on the governorship there at the Federal Reserve. But he, again, wanting that more aggressive interest rate cut of 0.5%. In the July meeting, we had two dissenters, two Trump-appointed Fed governors there, Waller and Bowman, who wanted the Fed to cut rates at that time. It seems like this time they were okay with the quarter-point cut, but Miron, again, wanting that half-point cut from the Federal Reserve.
All right. And Elizabeth, what more are you reading?
Yeah, Kira, so the other key headline here is that the Fed is now signaling more interest rate cuts beyond this one just announced here moments ago in the months ahead. And that signals a concern and really a pivotal moment here, Kira, in that the Fed is now looking at the economy and it's saying we need to embark on this cycle of rate cuts, not just today, but more in the future.
Despite this news, not everyone is convinced the cut is a win just yet. Fabian Doré over at Sygnum Bank warns the path forward is messy. The labor market is weakening, inflation remains sticky, PMI shows business activity reaccelerating, and producer price inflation is easing. Or in other words, the Fed is basically staring at a dashboard full of blinking red lights and deciding to tap the brakes anyway. But here's the only line that mattered to markets. Fed cut rates. Bitcoin breaks 117,000, and if you squint hard enough, you can even see the faint outline of October on the horizon, so there's a lot to get excited about. All right, we're going to take a quick break, but when we're back, we're going to be joined by our second guest of the day who's going to be talking some news stories with us, so stay tuned. All that coming up on the Blockchain Report when we return.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, welcome back. It's time for more Bull Run. But joining us for this portion of our Bull Run is our next special guest of the day. He's a computer engineer turned product leader who saw central banks wreck money and decided to build Noah's Ark on Bitcoin. He's behind the Bitcoin Tribe and Bitcoin Keeper, two tools making self-custody, multi-sig, and inheritance planning actually usable for the rest of us. Let's give a big blockchain report welcome to Anant Tapadia, everybody. Anant, welcome to the show. We are pumped to have you, and so is our audience. How are you this morning? Thanks for joining us.
Thanks, Hank. That was a nice introduction and some nice cheer along with it. I'm good. How are you? Thanks for having me.
I'm doing great. We're super excited to have you on the show today. We're going to talk shop about some of the big stories in the Bitcoin universe today. But before we do, I would love for you to just kind of introduce yourself briefly to our audience that might not be familiar with you and your work yet. Who are you? What are you up to? Do it in under 30 seconds for me.
Yeah, so this is Anant Tapadia, like Hank mentioned. So I've been building in this Bitcoin space for the last 7-8 years. And I've built some awesome tools, awesome products, which underpin the whole ethos of self-custody. So a lot of things have been built on top of that in terms of how people actually secure it. So a lot of those tools have been, something that my team and me have been working on.
Amazing. Well, we're going to get into more detail with those in just a bit, but hang tight and out. We're going to talk about this next story. I'm going to read it, and then I'm going to bring you back to chat about it. Sound good?
Super.
Let's rock and roll. Okay, next up, K33 Research reports that 1 in 4 public companies holding Bitcoin are now trading at values below the worth of their actual BTC holdings. Yeah, the market is literally saying these firms are worth less than their coins. It's kind of like buying a Ferrari dealership for cheaper than the Ferraris that are inside. K33's head of research, Vettel Lund, warned this gap is already choking off capital. Issuing shares below NAV is dilutive, and companies trading under the value of their Bitcoin end up giving away more ownership than they receive in return. The most dramatic case, of course, is Naka, the Kindly MD and Nakamoto Holdings merger vehicle. Now, Naka has lost 96% of its market value from its peak. It now trades at just 0.7 times NAV, down from a mind-boggling 75 times. Other firms below water include Tether-backed 21, Semler Scientific, and the Smarter Web Company. The average NAV multiple across treasury firms remains at 2.8, but that's down from 3.76 just back in April. The spread is widening too. Bigger players like MicroStrategy still hold premiums. Smaller ones are slipping into the deep end. Accumulation has slowed down also. In September, treasury firms added just 1,428 Bitcoin per day, the weakest pace since back in May. One analyst joked that treasury stocks just went through a full 4-year Bitcoin cycle in 5 months. First up 5x, then down 70%. Speedrunning crypto pain, if you will. Now, Lund called the declining premiums rational. Many of these firms face advisory fees, insider incentives, and tangled capital structures that make holding Bitcoin more expensive than just holding Bitcoin. Public companies now hold over 1 million BTC, but K33 says spot ETFs and retail flows are emerging as the real drivers of demand, not treasuries. On the derivative side, CME futures are trading at modest premiums again, suggesting a more balanced market compared to the overheated tops. But funding rates remain elevated, leveraged longs are crowding in, and a squeeze is always lurking. GD Culture Group showed exactly how badly this can go as they announced an $875 million share-based acquisition of 7,500 Bitcoin from Polis Capital. The market rewarded them by nuking their stock 28% in a single day. Their market cap now sits at $117.4 million, down 97% from its 2021 peak. Meanwhile, Michael Saylor's strategy now holds over 638,000 Bitcoin, cementing its title as king of the corporate hoarders. Let's take a look here at the Bitcoin Treasury's website. This is the place you can find everything about what your favorite public companies are doing with their hoards of Bitcoin. So right here, you see we have the leaderboard. Up at the top, no surprise, is Strategy. Let's take a quick click on Strategy there, and we can go to their individual page and see what or how their Bitcoin holdings are affecting their overall business. So, guys, if we can just click Strategy there, we'll bring it up. Great. So this is Strategy's page. They got nearly 639,000 Bitcoin right now at an average cost at about 73,000, almost 74,000 a pop. There you go. Saylor approved that one. Right now, they're currently in the green pretty considerably on those holdings, nearly 60% right now. So they can ride out some big Bitcoin turbulence if we see any in the near future, which is not always the case for a lot of these other, Bitcoin treasury companies that started stacking well into the hundred teens. So they have a lot less room for error on those. So if you scroll down, you can even check out how their stock and financials are being affected by Bitcoin's price. I think we just passed it there, but that's okay. Nonetheless, BitcoinTreasuries.net, #1 place on all the interwebs to check out what your favorite public companies are doing with their Bitcoin stashes. So check it out. Let's head back to camera 1, please. Also on that list, you might have seen, was Mara Holdings. They are in the second place with over 52,000 Bitcoin. 21 Capital, founded by Jack Mallers, is stacked over 43,000, and the Bitcoin Standard Treasury Company is sitting at around 30,000. So yes, 1 in 4 treasury companies are underwater right now, but the whales, well, they still seem pretty fat and pretty happy. We're bringing Anant back in. Anant, K33 says 1 in 4 Bitcoin treasury companies are trading below the value of their Bitcoin. Isn't that basically like buying a car dealership for less than the cars inside are worth? Like, how does this even happen? What do you think?
I'm not very surprised. We've seen these kind of abstractions. The way I look at it is like Bitcoin is this massive hole, massive gravity pulling thing. And then people try to position themselves adjacent to Bitcoin, assuming that, some of the power that it is sucking, they will be able to grasp it, right? And a lot of them do, from altcoins to ICOs, they do, but they are just flash in the pan. So the way I see these companies, they're more an abstraction on top of Bitcoin. So what would really happen if you are going to build that on top of Bitcoin is you have Bitcoin's volatility, and then on top of that you're adding another complex structure. And I think you described it pretty well with different kind of products they offer, and it has its own risks and stuff like that. So this is bound to happen. There might be people who get it right. There might be people who kind of like are conservative enough to, weather the storm. But then there will be people, the long tail, would take more and more risk. And that is where you would see, things falling apart. So I'm absolutely not surprised. I would think that this number would go from anywhere from 25% to up to 80%, to be honest.
Yeah, I mean, this whole Bitcoin treasury play has been a big narrative of the Bitcoin ecosystem here in 2025. But do you think now, seeing this, and are investors starting to realize that holding Bitcoin directly might actually be a better idea than holding shares of a company that holds Bitcoin? Do you think this is going to turn more people to holding Bitcoin natively rather than doing it through a publicly traded company?
My understanding is that the most of the money, most of it that comes through for these companies are the ones who cannot directly invest in Bitcoin. So there are lots of funds and hedge funds and pensions that are really not capable of doing that. We saw that with ETF. A lot of new doors opened up, and there are a lot of people who came into Bitcoin even though they wanted. I know a lot of such folks who wanted, but their the company structure does not allow them to do that. So they came through ETFs, and then therefore there are many more companies who might want to use this path to get in touch with Bitcoin. See, the problem is not having these companies. The problem is getting to a level of leverage that is going to wreck when the volatility strikes, right? You can really have a nice structure around it, and you can be conservative about it, and you can offer product which are really honest, really transparent. That's why you would see Michael Saylor is very, 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 very keen on having everything transparent, everything announced, everything out there. As soon as you introduce any kind of opaqueness between Bitcoin and what you are doing, that just kind of creates havoc. So it is not a bad strategy, but most of the people will do it wrong. Both are correct.
Yeah, and if treasury companies, as a result of this news, and we're seeing a lot of their stock holdings go down quite considerably, if treasury companies were to slow down their accumulation like they did, they have been doing so this month, do you feel like that weakens Bitcoin's momentum, or does ETF and retail demand, are they going to be making up for that in the wake of their perceived absence, if that's what ends up happening?
To answer that question, I think I would be pretty much like trying to shoot in the dark. We are in a completely new territory. See, Fed cut rates today, but you would see that it's still not all-time high. That doesn't normally happen. So not just the rates were cut, he even kind of suggested that there are further rate cuts coming in, but probably the market is now knowledgeable enough to have already priced in those things. So we don't really know whether the momentum is going to go or not. Maybe a lot of people already assume that 50% of these companies are going to go down. There will be volatility. Maybe they have strong hands. So I would not really. I'm more a student when it comes to these things, and I don't have to predict because I'm not going to do any kind of trade based on these things. So honestly, it's for us to learn and see how things pan out.
Yeah, sounds like I'm on board with that. Sounds good. Now, we got lots to cover still, so hang tight. We're going to go over this next story. I'm going to chat with you in just about a second here, because PayPal has announced something new called PayPal Links. And yes, it's exactly what it sounds like. A personalized one-time link that lets you request or send money without sharing bank details. Until now, PayPal Me Links require the recipient to enter the amount. And with PayPal Links, you get to set the amount yourself, add a note, or even toss in an emoji if you want your payment request to look extra passive-aggressive. Now, when the recipient accepts, the fund hits immediately. Unclaimed links expire in 10 days, but don't worry, PayPal lets you send reminders to people who conveniently forget. Here's the real kicker here, though, is PayPal is expanding this system to crypto transactions too. That means you can send Bitcoin, Ethereum, or PayPal's PYUSD stablecoin directly through these links. And because these are friends and family transfers, they're tax exempt. No 1099K forms, no reporting, no explaining to the IRS why you Venmo'd your buddy $2,000 in Bitcoin labeled pizza. This is a huge shift, okay? For years, crypto lobbyists have begged for exemptions on smaller personal transactions because every other type of crypto use, selling, trading, or paying, normally counts as a taxable event. PayPal is sidestepping the mess by saying personal transfers stay personal. And it's not a small rollout either. The company plans to expand globally later this month, starting in the US, then heading to the UK and beyond. PayPal says it's already seeing double-digit growth in consumer payments, and Venmo just hit its highest payment volume in 3 years. They want to connect billions of wallets worldwide. And remember, PayPal has been all in on crypto for years now. They launched trading back in 2020, partnered with Paxos in 2023 for PYUSD, and now their stablecoin sits as the 11th largest, worth nearly $1.3 billion. The stablecoin also powers their Pay with Crypto feature, which lets small businesses accept dozens of coins. So if PayPal is telling its hundreds of millions of users they can send Bitcoin links tax-free, that's one more giant funnel of adoption pointing straight into the Bitcoin price chart. We're bringing Anant back. Anant, PayPal just launched PayPal Links, where you can send Bitcoin or stablecoins through simple payment links. Do you see this as real adoption, or is PayPal just making Bitcoin look like another PayPal feature? What do you think?
I think this is a welcome change and welcome feature. Not that you could do anything about that, but it is going to give a lot of people exposure to what Bitcoin is, how does a receive address look like, how does the conversions work, and that it is a 24/7 market and so on. What they would not learn using PayPal is basically they would think that is just like sending dollars and maybe the fees are a little lower or higher. What they wouldn't understand is that the two main strengths of Bitcoin, which are censorship resistance and non-inflatable asset, those things are not necessarily they're going to get it using PayPal. If PayPal does not like something and they have censored things before, they can censor your Bitcoin/stablecoin transactions also. So you do not get that benefit. Nevertheless, you do get exposed to the idea of Bitcoin and stablecoins, and once you are censored, you will just download a simple wallet like Bitcoin Keeper or Bitcoin Tribe and start using it. So yeah, it's a good thing.
Mm-hmm. With that being said, though, do moves like this help Bitcoin become normal money? Or does it maybe risk funneling Bitcoin through centralized platforms instead of keeping it truly peer-to-peer? Like, where do you stand on that?
So if you look at the distribution of Bitcoin, that is what it pretty much boils down to. Even our previous discussion we were having, that's also kind of a centralizing force. If people are going to put money into Strategy and Mara and others, it's basically a company and exchanges and PayPal holding that money for you. So that is definitely something which is a centralizing force. But if you look at the distribution of Bitcoin, even now around 50 to 60% of Bitcoin is held by plebs and individuals, retail individuals, right? And a lot of them that is in self-custody. That is why I think from that perspective, as long as that number doesn't go down very drastically, we are pretty much safe. I'm an optimist, so I would like to think of it that way.
Yeah, no, I think I agree with you on that. And I'm in the camp that like as long as we can get more people using Bitcoin, they can see the benefits of Bitcoin. So even if it's through a centralized nature right now, it feels like it's a general step in the direction that we're looking for. So I'm here for it. I'm okay with it. All right, we
absolutely.
got another story here.
And you can't really.
Go ahead.
Sure. Go on.
Go ahead, please.
So I was saying that you cannot. First of all, there were a lot of companies who started letting you trade Bitcoin, but they did not allow to withdraw your Bitcoins. Then that changed. Now they are allowing to withdraw Bitcoins, and as long as you are able to, that's a key feature. As long as PayPal allows you to withdraw your Sats, your Bitcoin, then that is very important. You have an exit gate. As soon as PayPal starts acting up, you can just leave the shores and just self-custody or go to another service. That will keep them in check. So an important feature to look out for is, can you withdraw to self-custody or not?
Yeah, good point for sure. All right, we got another story coming up. Hang tight and out. We'll be right back in a second here because BTC Inc. and Strategy Inc. have renewed their strategic partnership on the Bitcoin for Corporations initiative for another 5 years. That's stretching all the way through 2030. The initiative currently represents 38 companies that collectively hold 69% of all corporate Bitcoin. Yeah, more than 2/3 of the corporate stash sits in this very club. George McHale of BTC Inc. said the extension proves adoption isn't slowing down. He even added that hyper-Bitcoinization is closer than we think, which, to be fair, is the sort of line you'd expect from the organizers of the world's largest Bitcoin conference. Strategy CEO Phong Le echoed the enthusiasm, saying the partnership supports corporate leaders looking to implement the strategy playbook, which is basically raise capital, buy Bitcoin, and repeat until retirement or sainthood, whichever comes first. The renewed deal means Bitcoin for Corporations continues to provide executive networking, investor relations, and educational resources for CFOs trying to explain to their boards why they're wiring money to Coinbase. Members also get vetted service providers, curated programming, and access to global events in places like Las Vegas, Abu Dhabi, Hong Kong, and Amsterdam, because nothing says financial education like an executive retreat in Amsterdam. BTC Inc., the parent of Bitcoin Magazine and the producer of the Bitcoin Conference, calls Bitcoin for Corporations its flagship initiative. Strategy, the world's first and largest Bitcoin treasury company, calls it business as usual. The program will keep producing research reports, corporate case studies, and glossy decks showing why Bitcoin is the only rational treasury reserve asset. And now they've got 5 more years to keep hammering that message until every CFO in the world caves. We're bringing Anant back. Anant, Strategy and BTC Inc. just extended their Bitcoin for Corporations program through the year 2030. It represents 69% of all corporate Bitcoin holders. Does this concentration make Bitcoin adoption stronger, or does it create too much reliance on a few big players? What do you think?
So I don't think so, and this is pretty much a non-news because I know people in both of these companies, and they are proper Bitcoiners who want to work with each other. And when you talk about big players, I don't think big players have as much say in the Bitcoin ecosystem as you would expect. And a clear sign of that is what's happening with BTC Magazine's Naka, right? They were not able to predict it. The share price went down 96%. So yeah, they are trying to, corporations like any other entity, individuals, companies, corporations have the right to hold Bitcoin, and our company also holds Bitcoin in its treasury. So that's completely a valid use case of savings technology. So that does not really add to any kind of centralization force, as the way I see it. Again, it goes back to the distribution of the whole thing. See, there are two types of Bitcoin maximalists. There is one, people who are asset maximalists, like Bitcoin is the asset and it will kind of take over the world. And then there are protocol maximalists who think that, Bitcoin protocol is the protocol and you should be able to do everything on the Bitcoin protocol. These kind of initiatives, all the ones that we talked about previous to this, are people who are asset maximalists, and they don't want to see protocol trying to do stuff more than anything that affects the asset. They want the asset to be untouched. So both of these companies have that kind of a view. I know BTC Magazine has slightly wider interests than just the Bitcoin asset. They have been looking at assets on top of Bitcoin, but it's a net positive basically.
Yeah, I agree. I mean, they're trying to onboard more people, and it's kind of spreading the wealth. The more companies you get involved in the Bitcoin space, the more different hands it's held in, and we can get all this centralization nonsense out of the way here. But one concern I have is that this program basically teaches CFOs the quote unquote sailor playbook, right? Raise money, you buy Bitcoin, you repeat. But do you think that's really a sustainable strategy for most companies out there, or is it a recipe for disaster because not all of these companies operate and have the same operations in the same situations that Strategy does? So what do you think? Is this a good thing that can be rinsed and repeated for other companies, or is this trouble brewing ahead? What do you think?
Yes and no. So one, it can't be copied as it is. because strategy has a very unique approach. But if you look at Rumble or you look at some other companies who just hold Bitcoin as a treasury asset, like our company, then that's a perfectly fine. It's not going to spiral out of control, because what you're doing is, instead of having melting ice cube in your treasury, you are just having a solid asset. So the playbook, Microsoft strategies playbook, really consists of two parts. One is, how do you hold Bitcoin securely with the help of partners and custodians and whatnot. But at the same time, strategy has gone ahead and tried to leverage the fiat system, right? You can call it a speculative attack, or they have products out there which people can buy, which allows them to buy Bitcoin. That is not the strategy that, for example, Rumble is using. So these two are completely two different things. One is a very conservative and every company should do it, have some allocation of their strategy of the treasury into Bitcoin. But the second part, where you're taking risk by introducing new products to the market so that you can buy more Bitcoin, that is a leverage play. That is where the companies need to be careful about. So if you really understand that playbook, and you understand that your company's situation might not be exactly same as strategy situation, and you might have an operating business which you want to focus on, then it's completely something you can play with.
Mm-hmm. Yeah. No, I get what you're saying. I mean, Michael Saylor has certainly been a hell of an evangelist for the space, but I don't know. So what works for some might not work for others, and I feel like we're kind of seeing that now with like Naka and these other companies have these big drawbacks. So I think we're kind of at that experimental stage where people are seeing, or companies are seeing, if this playbook will work for them. Because I don't think it's meant for everybody. It's meant for a lot.
Absolutely.
But just because it's working for somebody doesn't mean it's necessarily going to work for everybody. All right, time for our deep dive with you, Anant. So hold on to your hats. We're going to run the stinger and get into it. So let's do it, guys. All right, Anant, this is the part of the show where we get to talk all about you and what you're up to, so get excited for that. You, my friend, have a very interesting background. You spent over a decade in IT, consulting and financial services, including senior roles at Virtusa, and later as a director. Makes me wonder, what did you see in Bitcoin that made you walk away from that stable corporate world to start building in a still nascent industry? Like how did you get introduced to Bitcoin? What was that orange pill moment like for you? Tell us about it.
So there have been moments that I can't really pinpoint to one particular moment, but essentially, if your question around why did I decide to do it, actually, I don't know. Because I was so involved, and I was so pulled in by the whole concept of Bitcoin. And I was before I kind of jumped in head first, I was maybe playing around with this technology for 6 months to 8 months. But the more you read about it, the more you play around with it, and more you look around what's there, you just get sucked in. So I had to do something. I had to build in this space. I was building before, but I had to build in this space, not because there was a very clear-cut opportunity. There was, because there were a lot of products which were missing in the market. But at the same time, it was not really something that had a clear path. Like you said, it was a nascent industry. So that aside, I just decided with some of my friends who are my co-founders to jump straight in and do the best we could do, which is building products. And if you see products, so the way you interact with Bitcoin is really wallets, right? Really the way you custody your Bitcoin, either exchanges, but exchanges also have wallets. So wallets was an area where we thought we would have, the maximum impact given our skill set. So that is where we have been focusing on. And people think that, a wallet is a simple piece. But if you look at the stuff we have done in the last 5 years and the industry firsts we have done across both the apps, Bitcoin Keeper and Bitcoin Tribe, it's fascinating. And I'm just I'm really lucky to be able to do all that in the Bitcoin world.
And we're lucky you're building these products. These are things that we need in the world, right? It's always that's how the best products are always formed. It's something that you're I wish this thing was available, and then you end up building it yourself, which sounds like very much is part of your career journey. And I want to talk about some of these things that you're building, starting with the Bitcoin Tribe. So for someone brand new, tell us, what exactly is it, and why did you decide that this was the product that the Bitcoin world needed? Tell us about it.
So Hank, I touched upon a category bifurcation in Bitcoin, where we talked about a protocol maximalist and an asset maximalist. Protocol maximalist, like I said, means that people who want to build everything on Bitcoin, right? But that doesn't always go with maximizing the asset potential. And there have been lots of attempts, side chains and altcoins and a lot of things which have been built around Bitcoin, which kind of tries to get everything being done in the blockchain space. But all of them had a trade-off against the Bitcoin ethos or the Bitcoin asset. Now RGB, which is basically the colored coin single-use UTXO technology, I'll spare those details, is a tech which allows you to build stuff on top of Bitcoin without impacting the asset, right? So a lot of other technologies before this have been trying to do the same thing, but they have had some negative impact on Bitcoin, the asset. Now, when we looked at RGB, and this was like, again, four years back, and it has taken so much of time because it is really a sophisticated piece of technology, sophisticated piece of art. We realized that this is the right kind of tech, which doesn't impact the asset. It is net positive for Bitcoin, and therefore it will have a lot of goodwill, and it can pretty much let you put any asset on top of Bitcoin. You can call it stable coins, real world assets, stocks, bonds, anything and everything. So Bitcoin Tribe is the wallet, and it is the only wallet which is cross-platform right now for RGB assets, where you can issue any asset on top of Bitcoin and Lightning Network. You can send them, receive them, register them, verify them. It's like a home for RGB assets. So that's Bitcoin Tribe.
On-chain wallets, Lightning payments, and now even RGB asset support. So can you break down why that combination matters for everyday Bitcoiners?
So there is value that exists outside of Bitcoin, right? We are in the Bitcoin space, but there's a lot of value that exists outside of Bitcoin. There are houses, there are shares of good companies, and then there are fiat stable coins out there. So there is value. Art is there. There is value that exists outside of Bitcoin, right? And people do spend, and people do kind of appreciate that value. Now, what RGB really does is give a liquidity support, or gives a technological support for these assets. So Bitcoin is an asset, great. Bitcoin blockchain helps you use the Bitcoin asset and helps you transact with Bitcoin asset. That's wonderful. But for all these other assets which exist outside, for example, like I said, shares and bonds and stuff like that, what if you could reuse that same infrastructure, like a bus is traveling or there's a train infrastructure, you could use the Bitcoin blockchain infrastructure, which is the strongest network in the world, and actually transact with those real world assets. So imagine someone in Kenya buying an Apple stock or a part of an Apple stock, which is like built on top of RGB assets. So it is really powerful for a lot of cross-border asset transaction stuff. I hope that makes sense.
Mm-hmm. Yeah. And when we're talking about wallets, especially, we've seen this time and again, recovery is a huge pain point for new Bitcoiners. And Tribe includes wallet recovery, asset recovery, and even relay backups. How do you make that process bulletproof without overwhelming people who are just starting out in their Bitcoin journey? What is that like?
So definitely there is a part that users need to educate themselves about. There is no going away from that. So I would start off with that caution that you have to have some self-responsibility when you are using it. But having said that, because we have been trying to study this problem and talk to a lot of users about this specific problem for years, we have tried to automate and make easier, as many steps within this as possible. So you don't have to do multiple backups. You don't have to do backups multiple times. There's an encrypted piece of data which automatically gets uploaded on our relays or on your cloud. So there are a lot of steps which we have put in, which basically means you have to just like you have to secure your password. That's how you have to secure like 12 words, and that's it. We have drawn a line where we say across both our products, Bitcoin Keeper and Bitcoin Trade, that we would like to see a world where users have self-responsibility of taking care of those 12 words, but nothing beyond that. No additional data, no knowing what the RGB state is, nothing like that. So that's I think where we have the team has done a really good job.
Yeah, and then you brought up another thing I wanted to talk about too, which was Bitcoin Keeper. That's your multi-sig wallet product. What gap in the market were you trying to fill when you first designed Keeper?
So Keeper is for long-term savings, and it, like you said, it has multi-sig, it has mini-script, and a lot of cool tech. But what it allows you to do is that if you have substantial wealth and you have, you want to secure it for a long time, maybe for the next generation, that is the tool for you. So anyone who has, hundreds of thousands of dollars or millions of dollars, what they do is they use Keeper, they pair it with a couple of hardware devices, and just that's it. The app takes you through the process of securing it properly. It gives you tips of where to store those keys, and it even helps you with inheritance. And if you want a holding hand, then you can connect to one of our advisors from within the app. So it is a really streamlined way of doing self-custody, which is quite tolerant because multisig is tolerant. You can lose a key, but still not lose everything. So it has a heavy focus on being tolerant to user mistakes. And even if your one key is stolen, you are still safe, right? So that is the key premise on which Bitcoin Keeper has been built. And a lot of people who use it, they do say that, this does let them sleep easy.
Yeah, I mean, we could all use that. You say it gives you tolerance to human mistakes. God knows I've made plenty of those, so I might have to be signing up after the show. And you mentioned something else that was interesting, was about the inheritance part of it, which I think is super fascinating because you're essentially turning Bitcoin into long-term family wealth. So my question is, how do you see inheritance planning changing the way people view Bitcoin as a speculative asset versus generational store of value?
See, there are people. So that is a mind shift that people make when they are like within the space from 6 months onwards. So what we have seen is people who get in for the first 6 months, they don't care about even saving. They just probably write down those 12 words somewhere, put it, have it on exchange, all kind of things you wouldn't want to do. But as time passes on, 6 months, 9 months, they realize, what, there's something that could go wrong. And this is substantial now. It was 2% of my net worth, and now it has become 20% or like 50%, 80%, I don't know. So then that is when, they start thinking really hard about it. They want to secure it in a very safe manner. And that is where we start helping them out. Like I said, with multisig and all. And then at the same point, you realize that you're not securing this wealth just for yourself. You know where the keys are. You know where how to use those keys and stuff like that. But what about when you're not there, right? So Keeper really tries to help you where you're securing each key, not just with you in mind, but also the next generation in mind. So there are a lot of options which it gives, which ensures that the passing of your Bitcoin to your heir is as smooth as it can be, and it works along with the legacy system, because there are two parts to it really. One is how do you access your Bitcoin? That's accessing the keys and accessing the wallet and stuff like that. But at the same time, we still live in the fiat world. We still live in a legal world where the ownership can only be claimed. The right to those assets can only be claimed through a will or something like that, right? So it does not neglect that part. it gives you, okay, you know what? You have made these wallets. Why don't you send this letter to your attorney? We're not going to do the legal work for you. You have to do it with your attorney, but these are all the tools you would need. Send this letter, send these details, and ask your lawyer to, work around for the way they would work for any particular bearer asset. So it has those templates built in, and you just have to start using them.
Right. No,
so it takes care of both the accessing the keys and yeah.
Yeah, no, I was just going to say that's such a great tool, because I know when people pass on and money is involved, that always becomes a really sticky situation. And now with Bitcoin and other cryptos involved, we need solutions for these problems that are becoming more and more prevalent in the future. And it sounds like you guys have provided a pretty amazing answer to that. So kudos to you and the team over there. We're going to ask you more about that in a second. But before we do, Anant, we're going to play a fun game. Let's go to camera 3, guys. So here's the game, Anant. Every episode of our show that we have an awesome guest, we have them play a Price is Right style game with us. Here's the game. As you'll see on our leaderboard here, we have our list of past guests and their price predictions for Bitcoin. Again, this is all for fun, for the end of 2025. You can see they go as high as Knut Svanholm says 443,000. And then you have me at the more conservative end around 142. Bitcoin's at 117-ish today. And the winner, whoever gets closest to our, the final year price, I'm going to send a Roxom Patagonia jacket too. So you've seen the leaderboard. You see the price of Bitcoin now. What is your prediction? Where will we be at in Bitcoin's price at the end of 2025? I'd love to have your guess.
So you mean on the 31st of December at 12 p.m., right?
Right. That's correct. Yep.
I would say we won't. Yeah, I would say something like 165K.
165. Okay, put them on the board. Anant, awesome. So next time we have you on the show, hopefully I'll be putting a Patagonia over your back. Let's get back to camera 1 here, guys. All right, Anant. So we've talked about a lot today about your products. It's been an absolute blast having you on the show. I'm sure there are plenty of people in our audience today that realize that your products are providing solutions for problems that they either have now or will be having soon enough. So if they wanted to get more info on those products, what's the best place for me to send them?
So it's not just about problems, it's also about opportunities. So one is like a problem solver, the Keeper app, but RGB, gives you hope for the future, like what more can be done. So we are pretty excited about Bitcoin Tribe and where it can take the whole company and the product space. The best way to contact me is my Twitter handle, I guess, because, that's what you guys already have put out there. So I'm pretty much available. Just DM me and we'll take it from there.
And then if they wanted to potentially check out more information on Bitcoin Tribe or Keeper, is there a website I can send them to?
Yeah, so if you check out my profile, both the links for both the handles are there. We try to keep our Twitter updated in the sense like, have all the releases, all the new stuff coming out there. So it's a very easy reach. Just go to my profile, check out the handles for Bitcoin Keeper and Bitcoin Tribe, and you will be knowing what's happening, what's the best happening in this space.
Amazing. Well, I got to say, Anant, it's been the best having you here on the show today. We're so appreciative of you, your time, insight, and expertise, and for building these products that are solving some problems and also providing new opportunities for the future. So thank you again so much for joining us on the Blockchain Report, and hopefully next time I talk to you, I'll be giving you a nice new Patagonia.
Thank you so much. Thanks for having me.
Thanks. Pleasure is all mine, Anant. All right, we're going to take a break here at the Blockchain Report. When we're back, we're going to wrap things up with a little bullish, bearish, or BS, so stay tuned. We'll be back with more right after this break.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
we're going to wrap up today's bull run with one more story. Let's get into it. President Donald Trump has filed a $15 billion lawsuit against the New York Times, claiming their reporting damaged his meme coin project and other business ventures. The lawsuit filed in Florida federal court says multiple articles and a book published in 2024 contained false information that harmed Trump's brand. His team argues the coverage poisoned public opinion in Florida, where his Solana-based meme coin launched back in January. The reporting came months before the coin's debut, but Trump's lawyers claim it caused enormous economic losses. The coin itself started with fireworks. It soared to a $73 billion valuation shortly after launch, fueled by hype around Trump's return to the presidency. But it has since crashed over 88%, with its market value now hovering near $8.6 billion. Womp womp. The lawsuit argues negative media coverage weakened confidence in the project. Critics argue the volatility had less to do with journalism and more to do with the fact that meme coins collapse like lawn chairs all the time. The lawsuit doesn't mention Trump's other crypto ventures. Of course, we're talking about World Liberty Financial, the Trump's family's blockchain platform, and recently saw its governance token unlock and surge. That single move boosted the family's collective net worth by about $6 billion. Trump Media and Technology Group, the parent of Truth Social, has also bet heavily on the blockchain. The lawsuit claims the Times coverage and the related book were timed to coincide with promotional campaigns for The Apprentice movie, triggering a steep drop in Trump's media stock price. And the timing of the lawsuit itself, well, it came hours after the Times published another investigation. That report linked World Liberty Financial's success to a recent US-UAE deal involving AI chips. Totally unrelated, of course. Meanwhile, Trump's influence in crypto keeps on growing. Chainlink co-founder Sergey Nazarov has hinted at possible collaborations with the Trump administration to bring Wall Street, government services, and even voting systems on chain. So this lawsuit isn't just politics, it's another collision between media, markets, and a meme coin that managed to lose 88% of its value while still being worth billions. Whew. That's fun. All right, let's wrap up today's show with a little bullish, bearish, or BS. Run the stinger, boys. Let's. All right, it's time to recap today's top stories and see how things are looking for Bitcoin. Let's do it. First up, Bitcoin rocketed past 117K after the most recent Fed rate cut. I'm calling bullish on this. I mean, cheaper money and weaker dollar always pushes capital into scarce assets, and Bitcoin sits at the front of the line, baby. If more cuts are on the way, it's basically a green light for the next big leg up. So I'm feeling bullish on that. Next up, we got Jimmy Kimmel gets yanked off of ABC mid-merger. Ooh, calling BS on this one. This is media politics wrapped in corporate red tape. Not exactly Bitcoin price material. Unless, of course, Kimmel starts doing monologues about hash rate. This one doesn't register on the charts, so I'm calling it media drama. It doesn't move Bitcoin, therefore it's BS. Last but not least, we got Donald Trump sues the New York Times for $15 billion over meme coins. I'm calling bearish on this, all right? The case highlights how fragile and clownish the meme coin sector really is, and every collapse drags down retail trust in crypto as a whole. Less confidence in the broader market means slower spillover into Bitcoin in the near term, so I'm calling bullish or I'm calling bearish on this one. Meme coin circus erodes trust, so it's bearish. All right. Final score today, 1 bullish, 1 bearish, 1 BS, which means today's news is a perfect tie of BS out there, right? We got 1 pump, 1 dump, and 1 giant distraction. So I'm calling today BS. All right, well, that's a wrap for today's episode of the Blockchain Report. Cowboys and cowgirls, as always, make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on every platform that matters. As always, thanks for tuning in, and we will see you tomorrow to wrap up the week with more Blockchain Report. Until then, stay safe, stay strong, and as always, hodl on.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
The future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Good morning, everyone. This is Justin Roberti. How are you today? It is an auspicious day. Just yesterday, the Fed cut the interest rates a quarter point to between 4 and 4.25%. This is a move that's, of course, meant to stimulate business across the United States, because it's meant to make it easier for companies to be able to borrow, essentially, and therefore expand. But it also has a reputation for and a track record of increasing inflation, which is, of course, the problem that we've been having for some time now. So with first interest rate cut since late 2024, reducing the benchmark by 25 basis points, further cuts possible in 2025, Bitcoin's immediate price reaction to the rate cut was muted, struggling to hold above 115,000, while spot trading volume lagged and futures open interest surged, suggesting traders are positioning for volatility rather than for broad spot demand. I mean, that's kind of the problem. Anytime there's something that kind of shakes things up, there can be volatility in both directions as Bitcoin or whatever coin we're talking about kind of finds its footing. Altcoins outperformed Bitcoin after the cut, with tokens like Avalanche, Hyperliquid, and Binance and Solana posting strong gains driven by increased exchange inflows and institutional activity. Analysts and commentators ranging from Eric Trump to macro strategists are split. Some see lower rates as fuel for a BTC bull run and a melt up, while others warn of late cycle risk and potential crash if the economy weakens. There's growing narrative tension about whether Bitcoin is behaving as a safe haven like gold or as a high-risk asset, with institutional wealth managers showing new interest but market behavior remaining mixed. Spot Bitcoin ETFs are now widely available, with the influx of money on the sidelines from money market funds and from TradFi sources of all sort, all outside of our little Web3 sphere, are seen as potential drivers for crypto inflows as rates fall. Broader macro uncertainties persist, of course. A weaker U.S. dollar, tariffs, signs of slowing growth, added complexity, job reports, with some analysts warning that history suggests a sharp correction or even a systemic crash could follow any late cycle rally. So there's an awful lot to talk about. Obviously, the interest rate is something that's going to be of interest,